Thursday, February 21st, 2019, Maneco 64, home of alternative economics and contrarian views. So this morning I've got my end of Fed mug. It says Maneco 64 here. It also says robbing Americans since 1913, United States Federal Reserve System. And then it says end of Fed. Over here it has home of alternative economics and contrarian views. That's in the Teespring store. The link to it is in the description below. There's other merchandise there, Billy mugs, other things like t-shirts, even sweatshirts if you're interested. So this morning I want to talk about how gold is doing something it hasn't done since the end of 2010. So, and I'll show you what I mean later after we've had a look at the markets, see what they're doing this morning. It's just before 8 a.m. London. So we've got spot gold at 1338.80. So that's up half a cent. Yesterday gold got up to 1346 or 47, thereabouts. And then it came off late in the day after the COMEX regular hour close. We had the minutes of the Federal Reserve, the previous meeting. I will look into what they said after I've looked at the markets, and then I'll talk also about gold. Silver got up to around 1620, which was a resistance I talked about. And lo and behold, that also got turned around. It's now at 1598, down about 8 from the close yesterday. The range has been 1613 to 1595. Stock markets have been pretty subdued of late. Yesterday as well. I mean, they really didn't do much. I guess the Dow is up 60 points, but only a quarter of a percent. So not much direction there. Right now, the Dow futures up 71, or just over a quarter of a percent at 26,030. S&P 500 is up 0.2 at 2790, and the NASDAQ 100 futures up a quarter of a percent as well at 7,080. The pound is at 130.40, down about 10 pips. Looks like 130 now is a key support. I looked yesterday at the odds of what might happen on March 29th, which is the day in which the UK will have to leave the EU. And the odds of the UK leaving with a deal are 6-1. The odds of the UK leaving without a deal is 3-1. And the odds of them delaying and not leaving are 4-11. So that's what's the betting markets are thinking. So we'll have to see. Personally, I think the UK will leave without a deal, and I don't think that's a big deal. I don't think it's going to be the end of the world. The euro is unchanged, 113.36. Dollar's down 10 pips against the yen, 110.75. And the dollars continue to trade lower against the yuan. It got to 668.70 overnight. It's rebounded. It's now at 671, but it's still down slightly from yesterday. Crude oil still fairly strong, above 57, the WTI, and the Brent is above 67. Bond markets, the 10-year yield is at still quite subdued, 266. Bond market's not doing much. 1 to 5 yield spread is around 6 basis points. So yesterday, the minutes of the Fed were published at 2 p.m. New York. Gold and silver were trading fairly well before that came out. They were trading at gold was 1344, I think. Silver was above 1620. And you'd think, oh, they must have been hawkish. That's why gold and silver came down. But not really. I'll just look at the headline here from Bloomberg. It says, Fed hints a bias toward hiking endures as balance sheet roll-off nears end. So what does that mean? Well, there are a few, I read the article and I'll just tell you the gist of it. There's a few of the Fed governors that think they might have to hike again towards the end of the year if the economy continues to do well. That's a big if, in my opinion. And the roll-off, well, that's the quantitative tightening. They're looking to end that before the end of the year, which is way before. I mean, I think the Fed wanted to get down to around 2 trillion, their balance sheet. I'll show you right now. It's just under 4 trillion. So if they do another 7, let's say up until September, October, and they do 50 billion, around another 400 billion to get a takeoff, and we're going to be down to 3.5 trillion from an all-time high before they started the QT of 4.4 trillion. But if you look at prior to September 2008, which was the culmination of the financial crisis, that balance sheet was only at 860 billion. It's going to be still 4 times more than before the crisis. I thought the crisis was over. We could go back to 860 billion. So it just goes to show that the Fed is between a rock and a hard place. That's why you need to continue to protect yourself with physical gold and silver. Protect, of course, monetarily if there is a huge financial crisis, an implosion of the economy. Of course, there's a lot of other things that you have to be prepared for. That's what came out of the Fed. So now let's look at what I said earlier, that gold is doing something that it hasn't done since 2010. Here we go. You see, I've made all these little, this is a monthly chart, and I put these little circles, shaded circles. So what are they? Well, they're periods when gold went up more than 3 months in a row. And you can see that since the top we had in October 2012 at just below 1800, it's only done that twice. It was beginning of 2017. You can see it went up 1, 2, 3, 4 times, 4 months in a row. And now, actually, if you look at since October 2018, we've gone up 1, 2, 3, 4. This is the 5th month that we're going up in a row. So it's showing quite a bit of sign of strength. Of course, that I'm sure the powers that be will do. We'll try hard to not let it break through 1375. We'll see if they will succeed or not. But so the last time it went up 5 months in a row was from July 2010 to December 2010. It went up from around 1200 to around 1400. 5 months in a row. That was a sign that the gold market was very positive, and it continued going up, of course, until September 2011. So that's what I wanted to show you. That's a good sign. What else? I mean, it is frustrating, but one needs to be patient. It's not just about the price. Having physical gold and silver, and for my viewers in the UK who are looking to maybe get physical gold and silver, I recommend Gold Investments. They're arguably one of the oldest bullion dealers in the city of London. You can get a 0.5% discount if you use a maneco 64 promo code when you're buying physical, bullion, gold and silver. So it's not just about the price going up and you feeling better about having gold and silver. It's more about independence, in my opinion. There's an old saying about how Paper money is the money of slaves, silver is the money of gentlemen, and gold is the money of kings or monarchs. So you need to protect yourself and your family. Of course, I realize a lot of people out there are just making ends meet. They can't save any of their earnings, but if possible, yeah, just start slowly and small. Buy, some silver, maybe a small gold coin. See how you feel. Actually buy it and like touch it for the first time and see. You'll see what I mean when you do that. It's the same thing I did in 2002 when I first bought it. I wasn't thinking, I was just thought, oh, let's buy this as an alternative. And I bought my first coins, and it was very special. And then I started looking into it, and that's how I started looking also into the history of money and how gold and silver are so important. And believe me, the powers that be, the central bankers, and who are the central bankers controlled by? Don't know exactly, but some very, very powerful families that have been around for many, many, many centuries, I would say, and they're still in charge. So, and believe me, they have plenty of gold and silver. And that's why you need to maybe emulate them in that sense. Not, of course, not in other senses, I would say, but and that's it. So patience. As you can see, gold is on the cusp, I think, of moving in a quite a big way. So it's been, almost 9 years since we've seen 5 months in a row of gains for the price of gold. And of course, some people might argue, oh, gold has been a waste of time, but it hasn't. Even during the crisis of 2008, I saw Harry Dent yesterday noted that gold went down 33% during the crisis. But he doesn't, he's a little bit, he takes the top of gold in March 2008 to the bottom in September. And that's all he looks at. But he doesn't tell you that when the crisis started in 2007, gold was trading around just above 600. When it went down in September of 2008, it went down to 680. And then, less than a year later, it was up to 1200. So he, don't listen to the Harvard-trained economist, Harry Dent. He doesn't know what he's talking about in terms of money, in my opinion. He says that gold went down during the Great Depression in the 30s. Well, gold went up, Mr. Dent. It was revalued from $20.67 to $35 on January 1st, 1934. And if gold did so badly during the Great Depression, why did the U.S. government have to ban it, make it illegal, and confiscate it? So there you go. Stick to your guns. Protect yourself. Don't be a slave. Don't hold paper money. Of course, I have some paper money in the bank to cover expenses, but try to have a minimal amount. If you enjoyed this video, make sure you hit the like button. Subscribe to my channel if you haven't yet. Make sure you also hit the notification button so you're notified of my videos. And you can also follow me on Twitter, Steemit and DTube. I wish you all a great day. Take care. Bye.